Okay, here we go. We'll start this up. Well, good afternoon, everybody. This is John Weiss, the State Executive Director for Farm Service Agency. And we're glad you can join us for our first webinar here today with the Coronavirus Food Assistance Program. I know many of you across the country from the time I served on the U.S. Apple Board, and as you know, I married into an apple family. So we've been involved with your industry quite a while. What we're going to do is go through a little PowerPoint presentation for you all, and then kind of talk about CFAP, the application itself, and all of the other pieces that go with the commodity and the CFAP program, talk about some of the limitations and try to answer some of your questions. We will have a Q&A session at the end, and you can type your comments in the Q&A session. We'll open that up as we get closer to the end. As we're going through, if you have comments, you can type them in the message to the side in what's called the meeting chat. So we will go ahead and get started right off the bat with the presentation itself. So like I say, this is the Coronavirus Food Assistance Program, and you're going to have to bear with us a little bit too, because we're trying to make these programs work. So, Rod, can you see that PowerPoint there?
I can, yeah.
Okay, I'm going to check with John Devaney. Hopefully he's got his cell phone and he can text me and tell me if he's seeing the desktop we've got here. I'm not hearing from John. All right, Rod, I think what we'll just try to do is go through here, and you can tell me if my screen changes from the coronavirus screenshot here to the sign up period.
Yep.
Okay, so the sign up period for the CFAP is May 26, 2020 through August 28th of 2020. And then who's eligible for the commodity and producers, as you can see, it's anybody with ownership risk identified in the commodities, which specialty crops are, and apples, that suffered a 5% greater price loss as a result. And then from that price loss, the COVID community suffered the losses. So price risk is what is a critical definition, and subject to price risk is any production or sales and inventory that is not subject to an agreed upon price through the future forward contract agreement or similar binding document. The forms that you're going to need to qualify for the specialty crop applications from FSA, the first one is called an AD 3114, which is the application itself. We have provided to your associations a spreadsheet calculator that if you fill out that spreadsheet, it will also fill out your application. So you can just submit the application. You'll need a 902, which is an operating plan, a 901, which is the member information and the legal entities, if applicable. That if you filed for MFP, you know some of these forms and names. You'll also need a 941, which is an adjusted gross income certification. We'll talk about that a little bit later. A certification of income from farming and ranching, the 942, and then an AD 1026. All of these forms you can find on farmers.gov/CFAP, but we've also emailed these to your associations so that they can email them out to you directly. So you'll have the payment calculator and all of these necessary forms to fill out. We'll talk about some of these forms and filling them out as we go through this presentation. Payments are based on a specific rate as set by USDA, and the initial payments will be 80% of the calculated payment. So if you come up with a dollar amount in your application, whatever that dollar amount is, we'll only pay 80% of that calculated payment. And then the remaining subsequent payment of the additional 20% may be issued at a later date determined by the Secretary of Ag. So now we're going to jump into CFAP and payment eligibility. We will try to have our payment eligibility specialist join us here shortly. She's, it'll be he. We've designated that to Jeremy today if there's detailed questions of payment eligibility. But when you look at the payment eligibility rules, payment limitation will be attributed to the fourth level of ownership. The foreign person rule applies, and then your adjusted gross income cannot be over 900,000 as an average, unless 75% of your adjusted gross income is derived from agriculture and farming. Eligible producers for CFAP have had to have a share in the eligible commodity on January 15th. In addition, the producer has to be a citizen or naturalized to the U.S., a resident alien, partnership of citizens, corporation, LLC, or other organizational structure under state law, Indian tribes or tribal organizations, foreign person or foreign entity who meets the foreign person rule. So those are eligible producers. The eligibility forms, you'll have the CCC 902 is required at a minimum to complete by anybody who applies for CFAP. And you'll need your name, address, tax ID number, legal entity, and its members. And the members have to be detailed out. The membership information or legal entities includes joint operators, their citizenship status, and if there's any contributions of a foreign person. It's very important to note, and this is one that you need to be very mindful of as a producer and as somebody who's going to send in your application, that all producer eligibility forms related to CFAP must be filed within 60 days from the date you sign your application. If those are not timely filed or provided the eligibility forms, you will not result. It will be a net result of no payment going to you. The payment limitation general rule is that the total amount of payments is $250,000, excluding joint ventures and general partnerships. The attribution applies, so payment limit is enforced to its members. There's an optional increase on the 250,000 limitation for corporations, LLCs, LPs, and those must be entered on the AB 3114 Part H form. And just so you all are aware, we can send you this PowerPoint when we're done. So we can get it to your associations, who can get it to you. So It'll answer your questions. I know we're going through this pretty fast, but we want to make sure that we have detailed time for you all to do lots of questions and answers. The optional payment limitation increase for the corporations and LLCs can go to 500,000 if 2 members, partners, or stockholders contribute at least 400 hours of labor and management annually. And it can go to 750,000 if 3 members, partners, or stockholders contribute the 400 hours. The payment limit increase is applying entity only and not the members. And that's going to be a big one as well. The payment factor, the initial payment factor, as we stated, is 80%. The maximum amount a person may receive is 200,000. Or 400 or 6, and the subsequent payments would be issued at a later date. For the adjusted gross income requirements, to be eligible for the payment, a person has to, including the stockholders, members, and partners, must have the 900,000 or less, or at least 75% from ag, effective years 2016, 17, and 18. Which would be your base years. The definition of farm income is an FSA policy, so we cannot change the definition, which is the dividend income is considered farm income for CFAP when the dividend is derived from farming, ranching, forestry, and operations. When you're looking at the AGI, that is the 941 form. And that's the form that must be completed by the applicant and then submitted to the IRS for income verification. The 942 is completed when your income exceeds the 900,000, and then 75% comes from ag. It requires a certification from your accountant or a lawyer that says 75% of your income comes from ag on the form. Then the 1026, which is the HELC form, it's the highly erodible land and wetland compliance provisions. It's mostly related to those producing annual crops and other activities, so most of that form will not apply to you. So now we're going to get into the specialty crops portion, and Rod Hamilton, who is my programs chief for the state of Washington, is going to take over the presentation from here and talk with you all, and then we'll have him tell me when we need to switch slides. So, Rod, I'm going to start with the eligible crops and let you take off.
All right, John, can you just confirm that you can hear me?
I can.
All right. So as you can see, there's a fairly extensive list of eligible crops, and these are just the specialty crops. There are also a group called non-specialty that includes things like corn and soybeans. And even this list is truncated some. We didn't include things that we don't grow here in Washington. And there are a number of smaller crops like herbs and so forth. But the ones we probably care about the most here in Washington that actually would have been marketing and we're producing during this January through April period that we're really focused on. But anyway, apples, potentially blackberries, blueberries. I jumped down. Peaches were eligible and continue to be eligible, but only in one section of the program. Peach sales that occurred during that January to April period, the payment rate has been reduced to 0 now. Potatoes, of course, a big one. Pears is also one of our crops, and you can see potatoes have now been split into, instead of just potatoes, we now have fresh russets, fresh other processing and seed potatoes. And then raspberries, another crop in our state that now is earning more benefits under the program since the changes that were made the other day. Okay, next slide. So when producers report to us, they are just certifying their production that fits in each of the 3 categories we'll talk about. However, there will be spot checks. And so in a lot of cases, what our county offices are getting questions about from producers is, what will you accept as proof if I'm selected for a spot check, rather than just saying I'll give you a number. There, most producers want to make sure they do it right and don't want us to come back to them and ask for money back. So we've spent quite a bit of time trying to help producers understand what production, but at the end of the day, it is your certification that we will put in the software. And then AMS, the Agricultural Marketing Service, has some responsibilities for specialty crops, and so they will also be doing some spot checks after the fact, and then they potentially can look at stuff in the applications we receive if there are some questionable data. Okay, next slide. So there are 3 items on the form, the application form, where you load either production or acres of production to determine payments. And the first one, and we've kind of gotten started down this path of calling them buckets 1, 2, and 3. You'll see in some of our software calls them bins 1, 2, and 3. It's item 32 on the application on that AD 31144 form that John talked about. This first one, bucket 1, is production that was sold January 15th to April 15th. We're basing that on the sales date, so it's basically the date the producer or their marketing company made a deal, if you will, to sell apples or whatever. So it's not necessarily, it's certainly not the date that the producer has been paid. That could come at a later date, but it's production that was sold during that time period. And it would include production sold at a reduced price. So for instance, had some questions about what about apples that ended up going to the juice market. As long as they're sold, even at that reduced price, they would count and be included in this bucket 1 payment. So next slide. Bucket 2, which is item 33 on the application, is production that was shipped off the farm and for which payment had not been received and will not be received. And there's been some confusion about this particular one because particularly the way the form is worded kind of lead you to believe that if I had production that I didn't get paid January through April, but I got paid in May, I can still include it here and earn a benefit. And that is not true. This has to be production that has not been and never will be paid for. So it's stuff that's generally going to be considered, things that were spoiled, that were destroyed, disposed of, those kinds of things. It's production that's spoiled during that 3-month window that we're focused on, and no payment again has been or will be received. It could include shrinkage for spoiled production, for instance, apples that were packed and had to be repacked for sales by the middle of April. Next. And the third one, bucket 3, is item 34 on the form, and that is production that was not shipped off the farm, was left unharvested due to market disruptions, and again, no payment was received. So for instance, apples, we would not expect to see many apples reported in this item because, of course, most apples are shipped off the farm at harvest. But we have other commodities like potatoes, which oftentimes are stored on farm, and so potentially if they were not shipped off and they went bad or had to be destroyed or disposed of during that January to April window, they would fit in this bucket. We are also allowing producers to put here production that they donated and did not receive a payment for. However, this bucket, because of the kinds of commodities across the country that were impacted, a lot of fresh vegetables and greens and things like that, it's reported in acres. So for instance, if you had production, I'll use potatoes as an example, if the producer had production that went bad during that time frame, but it's obviously tons of harvested production at this point, to get back to the acres, since the payment rate is per acre, they will just need to divide that production by their yield, in this case last year, and to convert that production to acres and report that on the application. Okay, next slide. So here's just an example. I picked apples and potatoes. Apples can get 5 cents a pound if they were sold during that window, 22 cents a pound if they were delivered but never paid for. And again, if it was production that stayed on the farm and went bad, it would be $1,500 an acre. And then potatoes, when they were initially announced in the program, were just one category. It was potatoes like apples are. Now it's been broken out into 4 different categories where they determined the 5% reduction occurred. And so we've got potatoes, fresh russet, fresh other, processing, and seed, as I mentioned earlier. And these are the rates. And every crop has this. There are still a few crops that do not have a bucket 1 rate. Apples and potatoes were in that boat until the recent announcements based on the Notice of Funds Availability, or NOFA, that was where people submitted comments. As a result of that NOFA, a bucket 1 rate was authorized for apples and potatoes and several other crops, but there are still a few that don't have necessarily a bucket 1 payment rate. Excuse me. Okay, next slide. So ineligible production is going to include production that was sold before or after January 15th to April 15th. And you see us referring to that time period a lot. The way the program was structured, that is the period that we have to look at. And so I know we've got situations where the market was disrupted during that time period. The fruit didn't necessarily, or the produce didn't necessarily go bad during that time period, but their sales were off, and maybe production was just being held. So if it was sold outside of that window, or if it spoiled outside of that window, maybe spoiled after April 15th, or donated after April 15th, that production is not eligible under the current program. Next slide. And this is just an example. It's a little hard to see on here probably, but it's an example of the section of the form for specialty crops. And so you'll see on there items 32, 33, and 34. Those are the 3 places where producers are going to report either production or acres that fits into one of those 3 categories. And that's what our staff will then use to generate payments from the application. Next slide. Okay, just a couple of slides here on a payment calculator. This is on the farmers.gov/CFAP site that John was referring to. I think a lot of producers have found this tool to be fairly useful. We were told on a national call yesterday it's been downloaded about 350,000 times. So it does seem to work fairly well and give you a pretty accurate idea, again, based on what you put into it, of the benefits that you potentially are eligible for. Next slide. And so if you can see here, the first one is it's going to show a CARES payment in one section, which is where the arrow is pointing, and next to that is a CCC payment. And you see that referred to quite a bit in this program. Just as a little bit of background, these, for instance, I'll use the specialty crops, as there are the 3 buckets I've referred to. Buckets 1 and 2 are being paid for out of the CARES funding. The CARES was the Corona response legislation that Congress and the administration put in place that allowed these programs that we're doing and all the other things like additional unemployment payments and stimulus payments and so forth. The other one is CCC, that's Commodity Credit Corporation. That is the legal structure that FSA uses to issue most of the payments that we generate for most of our programs. And so in this case, Congress provided funding in the CARES Act for some of the payments we're making, but they also provided additional funding to the Commodity Credit Corporation, and the Secretary of Agriculture used that money to provide some level of matching payment, depending on the commodity, varies a little bit across some of the commodities. In our particular case with specialty crops, buckets 1 and 2 come out of CARES and bucket 3 comes out of CCC. So you may see those on the application and things like that. When we actually generate payments, if you earn payments under both categories, you'll get 1 payment, not 2 from us. Next slide. And so you start off with just putting the basic information in, which I believe will help start the application itself too, if you're using this calculator, but you put the basic information in. The next slide. And so this is the part you're filling out. You'll see here they call it bin 1. I was calling it bucket 1, but you'll put in the information and of the crop and the pounds. In case of these commodities, that's what we're using. And then you will put in the information that the producer had in this case for sales January 15 to April 15. Next slide. And this is very similar, but it's the next one. It's bin 2 or bucket 2, and just showing that you will list those commodities, and really comes down to that production that you load, that in this case was shipped off the farm but was not paid for and never will be paid for. And the next slide. And this is the third one, item 34 on the application. And in this one, the producers, again, if they have production like potatoes that went bad, they're going to have to convert those pounds of potatoes back to acres that they harvest those potatoes from. And that's what they'll report on the application to earn the bucket 3 payment. And I think that is the presentation.
Okay. So now we're going to get to the meat of the bones. We just wanted to give you a quick overview of the program itself. So I'm going to go over and turn on the Q&A section over here, which is on. And you guys, if you have questions, you can type them out in the side corner, and then we will answer your questions as we go. So if anybody has a question, please, in the Q&A section, go ahead and type your question, and we'll start adding them. So okay. So I'm looking at looks like some of the questions have been being answered as we've gone. So Jose, Jeremy, do you see new questions? Or Jose, I'll have you read out the questions. Jose?
Okay, it looks like they would like more clarification on eligible apple pounds. What about pounds shipped to juicer or peeler markets such as Treetop?
If the commodity was shipped to juice or Treetop and sold, it does not qualify into any of the buckets because the commodity was sold.
Actually, John, I think it would, if it's sold January to April, I think it would qualify for bucket 1.
Correct. Bucket 1, it does qualify for if it's in the January to April, but anything after the January to April, it does not get included.
Will the presentation be available after the meeting?
Yes.
And then another question is, what if we had contracted apples sold in that time frame? Will they be eligible?
Rod, do you want to take that one?
Yeah, again, it gets back to were they sold during that time frame. It isn't necessarily, and again, I'm not anywhere near as an expert in the apple industry as you folks and John are, but for instance, if a marketing company said, all right, during that window, we're going to sell 1,000 boxes to retailer X, they want those delivered over the next 3 weeks, and so that's what occurs. As long as that sale, that, for lack of a better term, the deal was made during that 3-month window, then yes, they would be eligible.
Okay, and that appears to be another question that was asked. So you mentioned apples sent to processors are included, correct? So the answer would be yes, within that time frame from January 15th through April 15th. Our apples are packed by a packing house and we are paid on a pack out basis. How does that work for me?
What we're anticipating is that for apples, a lot of producers are going to, and pooling is, the pools is probably a good example. A lot of producers are going to have to go to their packing house in all likelihood to find out, all right, of all the apples you shipped during that window or marketed during that window, how much of that was mine? And I've heard some feedback from the field that a couple of, few producers have gone to the packing house, and the packing house is saying, the pool isn't going to be closed for a while, so we won't be able to provide you that information until later this summer. For the short term, that's fine because sign up runs through basically the end of August, the 28th of August. But at some point, the producer, if we get near the end and they're still not able to get that information, they may have to, make their educated guess, talking to the packing shed or something of that nature, and certify their production by the deadline, because that they do have to get the application in and all the supporting documents. But the application has to be signed by the 28th. The other thing that you may end up having to get from somebody like a packing house is, you saw on some of the slides, we talked about shrinkage a little bit. So if you had apples that were packed, couldn't get shipped, and had to be repacked to get the spoiled or the low quality apples out of there to dispose of them, that could qualify in bucket 2 because it's production that was shipped but will never be paid for. And again, the packing house is going to probably have to say, okay, we threw away X number of pounds of apples in that process during that window, and everybody has this percentage of it within the pool. So in most cases, producers are probably going to be looking to the packing house for a lot of information about what was marketed or what was disposed of during this 3-month window.
Okay, that answers 3 or 4 questions then I think that were listed on the Q&A. The next new one that I can see is if we have multiple orchards and multiple counties, do we need to submit an application in each county?
You do not. You can submit one application in your what we call recording county. It's usually where you're headquartered at, and so they will take your application for everything in the U.S. So, however, I will take the point just to make one important point here is there are certainly some complicated structures in many aspects of agriculture. We do need to make sure that the entity you apply under is the legitimate eligible entity. In other words, they had an interest, they had risk in that crop, and that, for instance, we unfortunately have had a few instances over the years where a producer maybe has multiple entities. He files in the name of one entity. It turned out that entity didn't actually legally have an interest in the crop, and the entity that did not file an application during the sign up. And so that can cause folks to be ineligible for the program. So it's really important that the correct entity apply for the program, though that entity that had a risk in the production of that crop. Okay, Jose.
Okay, so next question. Talking about payment limitation. If an individual owns shares in several farming entities, are they limited by the individual or by the entity? For example, if an individual is 50% owner in 3 farming entities, each entity qualifies for $200,000, $100,000 to each individual. Will the payment max out at $250 per person, or would the individual get $300,000 through the 3 different entities?
The payment limitation is applied at both the applicant level and at the member level. So it could, in that example, if that individual had those interests and potentially could be, the term that is used in the law is attributed. The payments are attributed to the members of the entities. And so that person potentially could earn $300,000. We're going to limit that person to $250,000. So once we've issued enough payments to get that person to $250,000, their share is not going to be paid in any remaining entity payments that we have going out. And that gets back to the issue that John was talking about a little bit earlier, where this provision where producers in certain kinds of entities can increase the payment limitation from $250,000 to $500,000 or $750,000 if the criteria are met, where members are are contributing at least 400 hours of labor and or management. That waiver is only allowed at the entity level, the applicant level. And so we still are going to limit everybody inside of it to 250,000. And kind of an unfortunate example, we had an operation that had 2 members putting in at least 400 hours, so they could have qualified for $500,000 in payments. But the way the corporation was structured at the first level, 100% of the stock was owned by a trust. And we are not increasing the payment limitation for those members. So once that member who owned 100% of the stock hit 250,000, payments stopped, not only for that member, but for the entity too. So we're seeing several cases, particularly folks with multiple entities, where even though the payment limitation may be 250,000 or raised to one of the higher levels, they're not going to get there because the members within it are going to hit the $250,000 beforehand.
Okay. The next question is going to be, since prices vary by variety, do we need to do our underlying pound calculation by variety?
In the case of apples, the answer is no. We are apples are apples for this program. So all we care about is pounds, or in the case of that third bucket, pounds converted back to acres. So the potatoes, on the other hand, we are splitting out the different kinds. So for instance, if you had fresh, Norgold potatoes, they would be fresh other, and fresh russet potatoes would be separate, and those would have to be split out. But a lot of the commodities, including apples, it's one number for everything.
Okay. For bucket 1, does the program pay for all sales between January 15th and April 15th, or just sales at reduced prices?
All sales. But let me just put one caveat on that. It goes back to that slide that John had talking about price risk. Forward contracts are a fairly common thing in the grain industry. Doesn't really sound like that's much of an issue in the apple industry, but the only sales that would not be eligible would be those where, going into it on January 15th, the producer already had an agreement or a contract that said, we guarantee you we're going to pay X amount for stuff you deliver down the road. And that gets to be a bit of a fine line between what is the difference between a forward contract and somebody who says, all right, I'll buy these apples from you and I want them delivered over the next 3 weeks. As long as that sale, that deal is made January 15th to April 15th, it's all right for there to be a price specified in that sale. It's on January 15th, if you had a guarantee going forward to get X amount per pound of product, then you are probably not eligible on that sale, because that's considered to be, there's no price risk, and that was before prices started to be impacted by the pandemic. So that's why we're taking that kind of snapshot look on January 15th to ask, did you have a price guarantee at this point for production you sold into the future? Absent that, everything you sell January to April 15th would fit in bucket 1.
Okay. Next question. I have heard the dates may be extended to include May or June dates. Have you heard anything about this?
So at this time, there's no, the current program that we have is just the January to April. If Congress decides to come up with another program, then and that gets issued to USDA, then we would handle the program appropriately. But this program is only January to April.
Thank you. The next question is going to be, during the time frame, fruit with excess decay cannot be sold to the processors that are dumped. Would those qualify for bucket 2?
In most cases, I would say yes, they would. I know one of the discussions we had with our national office is, a sale is a pretty easy thing to tie down in terms of when it occurred. Fruit spoiling is a little more challenging. And for instance, we ask our national office, so basically the producer has got to tell us by April 15th, this stuff was spoiled to the point I couldn't market it, and thus I didn't get paid. And their answer was yes, that's really what it comes down to. So, but yeah, if the producer can, with a straight face, identify production that spoiled by the middle of April and thus wasn't marketable and they never got paid for it, then yes, potentially that could fit in bucket 2 if it had been shipped off the farm like apples would have been.
Okay, next question. So do we need to have our packing houses generate reports of when the fruit was actually sold? We're farmers. We don't do the marketing or sales.
Yeah, and again, it gets back to our earlier discussion about working with the packing houses. I really do think that most producers and FSA are going to have to look to them because, as you say, they're in charge of the marketing. They have the records, and they're have the information about pools and so forth. So yes, in a lot of cases, producers are going to have to work with their packing house to get this information.
For clarification, does fruit need to be shipped to treetop or a processor to be eligible?
Hey, Jose, is that during the January to April timeframe, or are they asking for the timeframe after?
It wasn't
April
specified.
15th?
It wasn't specified.
Okay, because that makes a difference. So if it's shipped to the processor between January to April, then we answered that's the bucket 1. If it's shipped after the April deadline, if it was a packed commodity that then was repacked and the spoilage portion was shipped, then because that was in the time frame, they could do that. But that same spoilage of the repack could go into bucket 2. So it really depends on what they're talking about there.
Okay. Next question. If contracts were made between January 15th and April 15th, but shipments were after April 15th, would these be eligible?
And I believe the answer to that is yes. It's because we are going back to essentially the sale date. And that that varies a lot by commodity. Obviously, there's probably some standards in the apple industry, but there's a lot of different approaches. Some industries, everything is a written contract for sales. Some, it's almost all verbal. But we're going back to when did that sale occur? Did the sale occur January to April? And if it did, then potentially it could have been, and particularly something like apples, where maybe you don't ship everything at once. The buyer says we want them delivered, in a staggered manner over a few weeks. But the sale had to occur during that window.
Okay, so the next question, if we had sales contracts with the price prior to January 15th, but actually delivered and the weight was between January and the April timeframe, and then get paid after the delivery and inspection, does that count?
Again, if I understand the question, it sounds like the sale occurred before January 15th, in which case, no, it would not qualify.
Okay, next question. Do I need to be able to prove a 5% loss to be eligible for bucket 1?
So the answer to that is no. Because of the work of the associations and as the individual growers, enough data was supplied to USDA that qualified them into category 1. So they are now included, and you don't have to show the 5% loss, but you do have to have your documentation and verification that if there is an audit or a spot check, that you actually had the commodities in the time frame specified to match.
Okay, next question. At the packing houses, poor quality fruit is disposed of. Would those disposed of apples within the time period be eligible for bucket 2?
I'm sorry, Jose, could you repeat the question?
At the packing houses for poor quality fruit that was disposed of, would that disposed of fruit be eligible for bucket 2?
Yeah, again, as long as it was disposed of during that window and the producer is not going to get any compensation from it. If he's going to get compensation because it went to the juice market, then it would not fit in bucket 2. But if he's not going to get compensation ever, then Yes, the answer would be yes, bucket 2.
Okay. Contract date and sales date are 2 different dates. Bucket 1 says apples sold between January 15th and April 15th based on sales date. Please clarify.
And again, it comes back to the date of that sale. There's not always a cut and dried answer about what is a sale, when does it occur. Depends on the industry and the crop, but as long as the deal was made during that 3-month window to sell that amount of fruit to whoever the buyer is, then they qualify if it's during that window.
Okay, next question. We had apples we expected to pay after pack out around $300 per 20 unit bin. The packer said the buyers stopped taking the variety because of COVID. We then had to sell the apples for processing at about 120 per bin. Does this qualify?
There is no compensation in the program for getting a reduced price for the commodity compared to the price that was expected. However, if it's now that we have a bucket 1 rate for apples, if that sale at the reduced price occurred January to April, then it would fit in bucket 1 and be eligible there. If it occurred after April 15th, even at a reduced price, it would not qualify for any bucket.
Okay, so just to clarify, apples sold to treetop are considered sold and are eligible for volume in bucket 1. Thus, bucket 1 volume equals fresh market volume sold and treetop volume sold, correct?
Correct, if it's during that 3-month window.
If one member of a corporation maxes out at $250,000, are other members eligible to continue to receive payments?
Yes, as long as, but as I say, that once a member hits $250,000, their share in the entities they have hold an interest in for any repayment, any remaining payment, their share will be left on the table.
Okay. For the 75% AGI farming limitation, does that apply at the owner or entity levels? Must they qualify at both levels?
Yeah, and that brings up a point I wanted to make. One of the forms we talked about is that AGI form. That form we need not only from the applicant, if it's an entity that applies for the program, but everything within there. So if it has, inside of a corporation, you have 3 limited liability companies, and then inside of those limited liability companies, you have 3 individuals. We're going to need AGI forms from the applicant, the corporation, the 3 LLCs, and the 3 individuals. And if any one of them doesn't meet the 900,000, then potentially their share is ineligible. Again, they can go to that second form where we look at the 75% of their income coming from farming, ranching. But if they meet that, then we essentially waive AGI limitations. But if they don't, if not 75% of the income comes from it, then they're not eligible. And that is true of either the applicant or any entity or individual within that applicant. If they can't meet AGI, or the 75% rule, then their share would be left on the table.
Okay. The next question is, if we are a packing house, we have growers that harvested apples in our storage. There isn't a market for these specific varieties, so we'll not package them. They'll likely be dumped. Would these be applicable for bucket 2 or line 33?
So if the apples are still in storage and remain in storage, they are not part of this program. This program only covers sales between January and April. So January 15th and April 15th. So if you have apples that are still in storage and they are not going to move, they are not part of this program and won't qualify in any of the buckets. So that would have to be a different program.
Okay, next question. Price per pound for processing apples was agreed to in the fall. Apples delivered weighed and graded between January 15th and April 15th, do they count?
If I'm understanding the situation, if there was a contract that guaranteed a price prior to January 15th, then production sold under that contract would not be eligible. Now, there is one exception to that, and I don't know if this is applicable to the apple industry or not. When you have a price guarantee, like a forward contract or any kind of contract, if our national office refers to it as if it was sold at that price or higher. So if you had a contract, and again, I don't know what kind of contract this would be, but if you had a contract that guaranteed you $1 a pound for whatever commodity, but there was the capability in there for the buyer to say, no, I've changed my mind, things have changed, I'm only going to give you 50 cents a pound, then that's not the price guarantee that will make you ineligible. But if it's a price guarantee that says you're going to get $1 a pound no matter what, as long as then you're ineligible. But if there's a way for the buyer to get out of it or lower it or something, then that's not considered a binding agreement and it would not make it ineligible.
Okay, the next question is, can you please address again the pooling aspect of product sales? If we did not have sales from January 15th through April 15th, but we're in a pool and sold during May, do we apply the price impact on the sales prorated? And I think what they're getting at, Rod, is if they were in a pool and got advances between those dates, but they didn't get the pool closing until May, can they qualify at all?
And this is why I think are going to have to go back to the packing houses in many cases to get the information, because advances and things like that aren't necessarily what we're looking at. We're looking at what sold during that 3-month window. And so if the pool sold apples during that time, the packing house can tell us that, and they can tell us, I assume proportionally what each grower's share of the pool was, and thus what share of the sales they should be able to claim on their application. But again, the packing house has got to be able to tell us we've sold this fruit during that 3-month window. If they didn't, it sold after April 15th. Again, we're not so much tied to, we don't really care much about when the pool settles, because we're not looking at when the producer got paid, it's when that sale occurred. And if it did not occur during that 3-month window, it occurred in May, those apples would not be eligible.
And that's a critical point there, Rod, in that if your apples are part of the pool and they're still in storage, those apples in storage, even though it's part of the pool, won't qualify. It is only the apples that were sold in that time frame. So you don't want to put on your application the apples in storage or not sold, or ones that were not able to go to market after April 15th, because those won't qualify.
Okay, next question. Fruit donated due to the expiration date goes into bucket 3. This bushel figure needs to be divided out by average bushels per acre and then turned into an acreage figure, correct?
That is correct.
Okay. Next question. It is common to provide a price quote to retailers with intent to do business, but volumes are not committed and prices are subject to modification, such as a price quote prior to January 15th does not constitute a contract, correct?
And I would say for the most part, yes. Again, I'm not the expert. John knows much more about the apple business than I do. But it's my understanding in most cases with apples, that is exactly correct, that there is the ability for the price to be adjusted depending on quality of what's delivered, the market conditions, demand, so on and so forth. And so even though you have an agreement with a buyer and it says, all things being equal, you'll get paid this amount, but we can make these adjustments down the road if we need to, then I would say that kind of an agreement would not make the producer ineligible. The one thing I would say is that if a producer is unsure or a packing house is unsure what the agreement they have, is that going to make the produce ineligible or not? If they could provide us a copy, we could go through it and provide the producers and the packing house some assurance up front that we would consider this to be eligible production if you're selected for spot check, and these are the kinds of records you bring us. But we'd be happy to look at any agreement if there are questions about it.
Okay. Can a packing house divide all sales in a pool to the entire pool during January 15th and April 15th, regardless of who the individual growers were?
Not entirely sure I understand the question, but you know, we have kind of operated on the assumption, or I have anyway, that when pools sell fruit, in many cases, you know, they probably can tell you which producer it is, and if they can do that and report that to the producers, that's fine. But if it's such that it's just we pull the apples out, we pack them, they're all the same variety, they all got shipped, and we didn't necessarily know that it was Rod's apple in this box and Jose's apple in that box, then they can just prorate it among the apples that those producers in the pool delivered, and everybody gets their proportionate share. But if they've got the capability to say it was, you know, Jose's apples sold, Rod's apples did not, then they could report that production to the producers, and Jose could get paid, and I'd see if I could get him to buy me dinner.
Okay, next question. Does the industry 5% price decline for apples apply to every variety of apples?
Yeah, apples are apples in this. It doesn't matter what the variety is because they got designated into bucket one. It's just apples.
Okay, next question. Trouble logging on, so may have been answered, but have industry groups established all Washington apples lost 5%, and so no need to establish this by individual sale or variety?
That's correct.
Yeah. Next question. For the 75% AGI farming limitation, does that apply at the owner or the entity levels and must qualify, or do they have to qualify at both? And I think we already answered that one as well, but you can say it again, Rod, if you'd like.
Sure, yeah, we're going to apply that test to both the entity level and the member level. So if the entity doesn't meet the 70, you know, if their AGI is over 900,000, they don't meet the 75% rule, then the applicant is ineligible and the whole, you know, nothing is going to get paid. If an individual member of the entity exceeds 900,000 and 75% of it is not from farming and ranching, then they are ineligible and their share of the payment will get left on the table, even though maybe other people's shares could be paid.
Okay, next question. As a packing house, I can help explain pooling a little better. We pool the sales, but according to this criteria, it is no longer based on pool information. It is now based on individual sales basis. So if you and I both have fruit in the same pool, but technically only my fruit sold and none of yours sold, actual sales, not pool sales, then you would not be eligible. Only I would, correct?
Right, and that was the example we just gave with Jose and I. If we know that Jose's apples sold and mine didn't, then he's eligible, and I'm not. If we don't, we just get the pool information, and it says that, you know, Rod had 40% of the apples in the pool, and Jose had 60%, and they could credit 40% of what sold during that window to me and 60% to Jose.
Okay, next question. Bucket 32 is for production sold during the eligible time frame, regardless of price, correct?
Correct. And it gets back to, as John has said, the 5% loss level was determined for apples nationwide. That's what made them eligible for bucket one. And thus, we don't really care about the individual losses. I mean, obviously we do care, but in terms of making apples eligible, all you got to do now is qualify as having sales during that window, and there'll be a payment, because on average, apple growers suffered a 5% income loss during that window we were looking at.
Okay, and that is all the questions that I see at this time.
And I'll just take an opportunity to make one last point, just because I know a lot of folks in the apple industry aren't necessarily real familiar with our programs and our rules. Some of them probably are in the cherry industry and may have dealt with this under the MFP program. But there is, and this really only affects larger operations, but there is a statutory requirement for all FSA programs. As I said, we need, for instance, an AGI form for the applicant and every member of that applicant down to the 4th level. But there is a requirement, a statutory requirement, that to all levels, down to warm bodies, we need the name, address, and tax ID number reported. That is, Congress has made that a basic eligibility requirement for virtually everything that FSA does. And so that, if you get a really large entity, that can be a challenge for folks to try to meet. If people don't want to file an AGI, we won't pay their share. But if they don't report their name, address, and tax ID number, we don't get all of those, and nobody is eligible. And so that can be a bit of a sticking point for fairly large structures.
Hey Rod, this is Jeremy. There was a question. It came in real early, and we may have jumped over it. It says, so field crops are getting paid on their non-contracted inventory, but apples are only getting paid on what was sold, not contracted inventory. How are those any different?
And we've gotten those a lot, that question a lot, and John may have some comments on it too. It's just the way the program got structured. I'm not privy to the discussions, but for the most part, if you look at these programs, the non-specialty crops are crops that Congress has designated in the last several farm bills. There's 21 of them, and they're just, they have a different approach on those. Some of it is based on what's in the farm bill. Some of it's based on historic approaches. And I can certainly understand why someone would say, I've got apples in inventory during this window. Guy's got corn in inventory during the window. Why is he going to get paid on his inventory and I'm not? And it's just the way the program was structured. All these programs that are not stuff that we deal with, that are considered under the purview of Ag Marketing Service, they came up with the criteria about how they would qualify for benefits and where they felt the 5% loss, for instance, was met. But it is in the basic structure of the program that non-specialty crops can get paid on inventory and specialty crops cannot. Again, as John said, if Congress makes changes, passes new legislation, whatever down the road, they could address those kinds of things. But the program that we've been provided today does not include a payment for inventory on specialty crops.
Rod, I don't know if you want to mention the 80% limitation on initial payments or not. And then there's a couple more questions in the chat box.
Yeah, so the 80% limitations, that's part of the PowerPoint slides, where we mentioned in the very beginning that when you submit your application and you see your total amount there, we'll only pay 80% of that. The other 20% would have to be done at a later time at the designation of the secretary. And then the other question is what kind of documents did the packing house give to the grower? The best example that we have seen of documentation going to the grower actually came from Blue Star out of Washington State. They wrote a letter to each of their growers and labeled out all of the commodities for each of the buckets. They did it with pears and apples. And basically they gave them the amounts that they just need to fill into bucket 1, 2, and 3 from the packing house and the group there. So if somebody knows the folks at Blue Star and Blue Star is willing to share their document they sent to their growers, that would be an outstanding document to use. And then a lot of people have asked about the Q&A and this presentation. We'll try to gather everything and get this out to the associations. It might take us a while to get all these questions pulled out of the system and put together. So, but we'll try to address that. Then somebody's talked about they keep calling the FSA office in Wenatchee, Washington, and no one is answering. So whoever the anonymous person is, Jose, who's on the presentation here, is the district director for that area, and he will make sure that someone is there. One other thing too with the CFAP applications is that we do, if you are calling your local FSA office, if you go to farmers.gov/CFAP, down at the bottom of that page, you will find an office locator. You put in your county and your city, and it will tell you the nearest FSA office to you within 30 miles of where it goes. And then we also have a call center that USDA created just for the CFAP program, that if you have questions or additional questions, or you call the local office and they're not able to answer because they're handling other producers at the time, you can call 877-508-8364. Again, that's 877-508-8364, and that is the CFAP call center hotline, where we have FSA folks from all over the country that can help you. There is an English and a Spanish option. So when you call in, it will ask you if you're seeking somebody in English or Spanish, and they will be able to help you. So, Jose, are there other questions that we might have? And then we'll take these last three questions, and then we've got another, we've designated an hour for this, so we want to make sure we answer everybody's questions, but we also have other presentations and sessions that we have to go to next. So let's take these last four. Jose, I'm going to close the chat session and we'll answer those questions, and we'll have a few closing remarks and wrap up.
Sounds good. So the next question is, I had a contract price after grading price there was a payment that was less. Does that qualify?
Again, all sales that are going to get benefit have to occur during January 15 to April 15. If you had a contract, but it allowed for a lesser payment than was specified in the contract, potentially that could be eligible if you got less than that contract rate. That might be a case you want to show the contract and the background information to the county office just to make sure that it appears to fit our criteria, so that we don't have a producer certify to some production that on spot check we decide no, that didn't qualify. So,
and that may have answered the next question. Who do we send the contracts for review to?
it would be the local FSA office that you're filing your application with.
Yeah, and I'm more than welcome to, if people want to send the contracts to me and ask questions about qualifications, you're more than welcome to do that too. Like say your local office will be the best contact, but I'm also willing to take a look at those and check the qualifications and get back with you as well. My email is john.weiss@usda.gov.
Okay, next question. How long does it typically take to receive a payment?
We don't like to give payment deadlines because each application is in its own unique entity, but we have been turning payments around on CFAP very quickly. I think the average right now for Washington State is just under 5 days, but that that can change based on the number of applications that come in, how many applications go to a particular county. So they will be processed as they come in and as quick as possible. So I don't feel comfortable saying, you know, you'll have your check in this number of days.
Okay, and then the last question, pooling impact is still unclear. The concept of pooling means that my decision as a packer to hold fruit in CA does not impact the grower. The sales are pooled. Wouldn't that mean that the pounds sold between the qualifying dates be prorated amongst the growers and the pools regardless?
Once again, that comes down to the fruit. The pooling aspect of the pricing points is one, but the only fruit that qualifies, or the only specialty crop that qualifies, is the product that was sold January 15th to April 15th. If the product is still held in CA, and it's held in CA after the 15th, it does not qualify for this program.
And that is all the questions.
Okay, well, everyone, this has been, I think, a fantastic thing for us here at FSA, and we hope for you all out in the field as producers and as commodity associations and groups. This is our first Teams live event that we've ever done out of the Washington State FSA office for a training. We're hoping that this is helpful in getting you all of the information about your CFAP applications. And if you have further questions, feel free to call us at any time. And we can walk you through those. Your local office can as well. You can also find answers at farmers.gov/CFAP, and there's a frequently asked questions there. And like I say, we would be glad to help you at any point, and feel free to contact us. We will work with your associations to get this PowerPoint out, and then we'll do the Q&A and try to get these Q&As out to you as well here in the next few days. So we appreciate everybody joining us. We hope this was helpful, and we look forward to seeing you all in our offices very soon across the country and here in Washington State to handle your CFAP applications in a timely manner. So thank you all for joining us, and we hope you have a great day. And